Welcome to Trillions. I'm Joel Weber.
And I'm Eric Balchunas.
We're almost there. It's almost 2025.
Yeah, this is it.
But before we do anything about 2025, we have to do a year in review episode.
Yeah, especially this year. It was unbelievable.
Things went up.
This is the most interesting, exciting, best year ever for ETFs. I'm just saying that right now. There's never been a better year.
Ever?
2021 was right up there.
Yeah.
This was better. This is, remember that movie, As Good as It Gets?
Yeah.
This is as good as it gets. So everybody just take a deep breath, savor it. It just can't be this good every year.
Okay. That makes me really worried about 2025. But right now, maybe feeling okay.
Listen, the key to life is to enjoy the good times and don't have your mind somewhere else.
Okay. All right. Live in the moment. I like it. So to help us process the moments that made up the year, we're going to be joined by Vildana Hajric of Bloomberg News. She's a cross-asset reporter, also a frequent guest on Trillions. Todd Rosenbluth, an ETF analyst at VettaFi, also a frequent guest on Trillions. And rounding out our panel, Athanasios Psarofagis, an analyst with Eric at Bloomberg Intelligence. This time on Trillions, a year to remember. Vildana, Todd, Athan, welcome back to Trillions.
Great. Nice to see you.
Thanks for having us.
It's great to be back.
All right. Well, we've got a format for this round robin. We're going to go around. We're going to hear everybody suggest a theme that they want to talk about that they think distinguishes this year. Athan, you're in London right now. Good to see you on our screen. Talk to us about what is your number one theme for the year.
Oh, it's, I guess, the most obvious, but probably the most important, and that's just record flows. U.S. passed $1 trillion in inflows. And I think we just have to appreciate that number, right? Like when you say $1 trillion in inflows this year, I think it was like high 900s in 2021. Obviously, we had the market participated in that. But what I thought was even more fascinating, yes, $1 trillion in the U.S., but every region hit a record this year. Europe, Canada, Asia Pacific. So it's just this amazing, what I love about the ETF is that it's just hitting all over the world. It's like transcending geography. So that I think was by far the most, probably the biggest thing to take away from this. That's just been a record all over the world.
And let me add to that with some numbers, Athan. I agree. That's the story of the year. The record was $910 billion, give or take a couple billion, depending on what data service you ask. So $1 trillion is 90, almost 10% over the record, obviously. But here's also something interesting. If you look globally, as Athan was alluding to, the assets went from about 11 trillion to 15 trillion. That is a 32% growth rate for an industry that's 30 plus years old. Now, the growth rate when ETF started out was 25% because it was small assets, easy to grow those numbers when you're small. The next decade was 17%. And so we're predicting 10% a year going forward to get to 35 trillion in 2035. Well, 32% is so beyond what I would ever assume. Now, of that 32% number, about 4/10 is from the flows. 6/10 is from the market. So the market won't be this good. As I said, this is as good as it gets probably. But the flows being that big of a contributor is really strong. That 32% number, again, astonishing. If you had asked me, again, we predict 10% a year going forward, so 32 is ridiculous.
If there's something I can add to that, too, just at the issuer level, right? Yeah, while it's a record for the whole industry, it's not just BlackRock and Vanguard, but like 70% of the firms have had their best year ever this year. So it's the breadth is widening out. So you have several issuers all hitting records this year, which I thought was also really impressive.
And do you want to know I'm just going to quiz you guys. What percentage of ETFs in the U.S., there's 3,800. What percent saw inflows this year? Get it between 5% and I'll give you a prize.
I'll go with 80.
75.
66. So you don't get the prize, but you were
What
very
was the
optimistic.
prize?
One of those gold coins that Todd brought. I was going to give you.
We haven't even had a chance to introduce what I brought, and she's already.
So Todd, I noticed that you brought some gold coins, chocolate gold coins, trying to sway favor.
Listen, I don't think there's a judge and jury on this. The audience is going to decide which of us does the best job.
I'm gonna sample the chocolate.
You should. So this is an early Hanukkah present for those that can't see this very visual podcast. I have a basket of gelt. chocolate-covered coins.
You talked about everything as baskets when you're in the ETF world. This is just a little like bag of chocolate.
It is when it's closed up, it is a basket.
Okay.
Is that a store of value?
It is. There's tangibility.
Diminishing because I'm eating the chocolate.
There is tangibility behind this. But I would note these come from Trader Joe's, not a sponsor, I don't think, but they're called Coins of the World because we are taking it equal.
Okay, Todd, let's do you next. What's your theme of the year?
Well, mine, piggybacking on what Athan said, but it's VU crossing the $100 billion mark with assets or inflows for one individual ETF. And IVV, which actually got passed by VU in terms of total assets briefly, had $60 billion. That would have been a new record on its own if it wasn't for Vanguard 500 ETF. So those two ETFs just setting a record is tremendous, is a great sign. Most investors probably start their ETF journey with a core S&P 500 based product. So I think that sets the stage for the next 30 plus years for people who are going to add additional products. So $100 billion, $60 billion, that's amazing.
Think about that. That's $2 billion a week into one fund. $2 billion for a firm after 5 years on the market is good. So Vanguard, again, we just get so bored of Vanguard. We get numb to it, but the numbers they put down are still just absolutely astonishing. Vanguard as a whole company is taking in $1 billion a day into their ETFs. VU at 100, again, that's doubling a record. I had the meme of Wilt Chamberlain hold up that 100, which to me, this is as hard to think this will get broken. You know, like Wilt Chamberlain's record. The only ETF I could see doing it is VU again, but absolutely extraordinary. And it reminds us that as much as we give attention to the sort of hot sauce, shiny object stuff,
some of us,
most touche.
No names.
Yeah,
Eric.
The bulk of the blob of money still goes to cheap beta. What was
the margin between VU and the runner-up and its runner-up?
Well, its current runner-up right now is IVV, which is roughly $60 billion.
No, it's 54.
Okay.
So it's $50 billion. It's double the number two, basically.
It's
insane.
Yeah. Why?
Well, mostly because Vanguard's brand for 50 years has been cheap. So they have this strong brand, trusted brand. They're a Boy Scout in an industry that's seen a lot of corruption. Number two, it's dirt cheap. 3 basis points for the entire S&P. The S&P kicks so much butt, and to get that for like basically no fee, and the frictionlessness of it, you just click a button, you own the entire U.S. capitalism in one shot. That's why I'm so bearish on this direct indexing and tokenization. That's the best. That's the deal of the century. You're not going to disrupt that for a while.
But to me, again, I got a reporter and an editor in the room. To me, the story isn't VU over IVV by doubling. It's that both of them crossed the $50 billion mark. So it's been a success.
I'm looking for tension, Todd. Let's talk about tension. It's
a little too kumbaya.
Yeah.
Cause some conflict.
I'm with you. Where was SPY on that list, by the way?
Well, okay, so SPY has these big Decembers because of tax loss harvesting. So it's rising quickly. It's number 5 with $30 billion. But by the end of the month, it could be 50, 60. It's possible it's VU, SPY, IVV, all above the last year's record. I called them three amigos because they're like the three that are tracking the S&P. But I could see that. But then SPY would lose some of that in the first quarter because of tax loss harvesting. But by the way, one thing to watch next year, VU and IVV, probably both around the same time are going to pass SPY. Then it's like, which one of those two will be the new king? I think VU separates itself in the year after that. So I think 2 years from now, we're having VU as the undisputed king.
That'll be a big moment.
BlackRock's not going to let that happen easily, though.
Yeah, okay. Tension, Todd, tension. Vildana.
Well, I was going to add to this, list of great things for ETFs overall, which is that there were 539 active ETF launches, which is 80% of the overall. And it was a year of record launches, right? So active, it was a big year for active.
Is that your stat? Because
no, it's not.
That should be you should use that.
I have some really good other stats.
Okay, well,
yeah.
How about that'll be mine? 660 launches. That's record launches, Joel. 80% of them active. The reason launches matter, and it's part of our support for the 35 trillion prediction, is that the more launches you have, the more good ideas you have. If everybody is here launching products, one of those or two of those is going to be the next big idea. So the innovation factor is at a record pace. And this year, we have an interesting group of big names coming in. You know, Phil Back said ETFs go Hollywood. I agree. We had Nouriel Roubini launch an ETF, Tom Lee, Rick Reeder, late in 23, but close enough, Jeremy Grantham, and this Treasury Secretary, Scott Bessent, is supposed to have an ETF coming out, but he might withdraw because he's Treasury Secretary, but he was going to launch one. And I think we could see Bill Ackman at some point launch one. Here's the deal. You know, there was a quote in the 90s. Michael Jordan was asked about like Utah and this other team. Oh, you scared of Utah? He's like, look, you could hype them up. Still got to come through Chicago. Still got to come through Chicago. If you want a ring, badass, right? That's ETFs. You want the assets, you want flows, you want customers, got to come through ETFs. Still got to come through ETFs. So everyone's going to have to come through ETFs for the most part, minus maybe some hedge funds or private equity, if they want to be where the people are.
So when you said big names, I thought you were talking about asset managers. I mean, those are big individual names, but MFS, which launched the first mutual fund ever, or has the oldest mutual fund, entered the ETF marketplace a week or so ago. Oakmark, which is a proven manager. So it's hard to count. In fact, I'm not sure I can even name an active manager that doesn't have an ETF presence, either directly or from a sub-advisory standpoint.
I can name one, Ron Barron, and they're thinking about it.
Well, about time.
Yeah, and
Snap.
that's a
Z-Snap.
50-some billion manager.
There you go. You earn yourself a gold coin.
Thank you so much.
MFS, interesting, because they launched the first ever mutual fund back in like 1923 or something. So for them to finally, you know, come in is, I think everybody's pretty much surrendered at this point. There's a couple holdouts, no doubt, but Morgan Stanley to me was the big one. That was last year.
All right, Vildana, if that was your
That was my extra.
non-stat stat, bring the hammer. Let's hear the real one.
Okay, so it was a really big year for levered single stock ETFs. I can't believe they haven't come up yet. This is the hot sauce or the super spicy hot sauce, the ghost pepper hot sauce, right?
Well, they're all flavors. The ghost pepper is the 2X MicroStrategy
Yes.
because that broke the volatility record. It's the 2X MicroStrategy, Joel, has a volatility of around 300%. That's a rolling 20-year. TQQQ, which is triple leverage Qs, is a fifth of that. So it's 5 times more volatile than 3X Qs. Think about that's the ghost pepper.
There's like a new strain of ghost pepper out there.
Well, to step back, there's 2 of them, right?
There's 2 of them.
There's one from Defiance, there's one from Tuttle and Rex shares, and they were so big that they were growing by billions in like days, basically, where at one point, I think Tuttle's was over $3.5 billion. And that was partly because MicroStrategy was going up so much post-election, but also people were adding tons of money. But then overall for levered single stock ETFs, we had 45 new launches, which is a record, although they've only really been in the U.S. market for a couple of years, but 45 new ones. Now we're starting to see fee wars there as well.
It's crazy.
So it's just, I think that was one of the really big stories of the year.
At the beginning of this year, single stock leverage ETFs had $1 billion, 1.3. They have 20 now. And like an NVDL 2X NVIDIA is $6 billion. That's Will Ryan from Granite Shares. That generates like $50 million a year in revenue for him because these all charge 1%.
Right.
So these are lottery tickets for the issuers.
Right.
And not only that, let's say you get a little bit of flows, like, I don't know, 100 million, and you're in a stock like NVIDIA or MicroStrategy 2X,
Yeah.
the asset accumulation starts to grow even if you get no new flows. So the fact that the stocks are going up a lot, these managers are getting paid even with no new customers. It's really going to draw a lot more competition. Now we got the guy was going to call them parlay shares, where it's you get 2X coin plus 2X NVIDIA, 2X MicroStrategy plus 2X Tesla. So you could like match these up. And then they have ones that battle each other. So you got battle shares and like parlay shares. It's going to get crazy, Joel. This is
Going to?
Yeah.
When they launch.
I know. From a guy who likes the GARP ETF,
Listen.
both you guys,
Listen.
Ethan and Tom, this is, look.
There's a reason $100 billion went into one ETF because
Listen.
people like simple, low cost, boring.
That's why we say in the team sometimes, it's no industry for old analysts, Joel. Todd and Tom, Ethan, they like the large cap growth at a reasonable price stuff. This is all like crazy to them. And I understand that. That said, I think a lot of this is a result of the boringness of people's core. The more you just marry passive and you're like, oh, I'll just wait 30 years, the more you're like, all right, well, I don't want to sit there and watch paint dry for 30 years. I want to have a little fun. Well, I'm not going to mess around with some, large cap manager because I already own those stocks. I want something really crazy, something to get my juices flowing. And that's why I think hot sauce is an ironic byproduct of the rise of boring passive.
Vildana, when you take away MicroStrategy and NVIDIA, what was the next single stock ETF that
Tesla, definitely. Well,
yeah.
you want
That's
something...
the whole suite, right? It's just like anything that can pop.
That moves a lot, yes.
Yeah.
Which is why it was so interesting that somebody filed, actually I think 2 issuers filed for Berkshire Hathaway, which barely moves, but they filed for 2X.
Does that make it more fun?
No, it makes it way less fun. So, the question is who, if you're wanting the adrenaline, do you really want to go for something that moves 0.05 in a
also,
single day?
Also, the 2X MicroStrategy, in a way, is 4X Bitcoin. So they which you can't do. Because MicroStrategy is 2X Bitcoin. These are 2X that. So that's why I also think people are trading it. Because there's 2X Bitcoin ETFs, but why do 2X when you can do 4? And I'll go to Athan on this. They've got 3X MicroStrategy in Europe. They've got crazier stuff there, but nobody cares, right?
Yeah, it's just that they don't have that sort of gambling culture that they have in the US.
They don't like potentially losing money?
There's not many
crazy
degens.
products here. No, there's
By the way,
5X NASDAQ here that they've been around for years with no assets.
If that was here, it'd be $1 jillion.
Could you imagine 5X NASDAQ?
I was
like salivating.
I was touring around Switzerland this year and like Europe and stuff. And when I went over the hot sauce part, I was like, so like, you know how you guys like have like a sports gambling account and like nothing. I'd see like one young dude maybe smile. And I was like, all right, maybe you. That's it. But like it did not resonate there. People are not into that.
Speaking of the crypto stuff, this is also part of this, biggest stories of the year. Eric and James were named CoinDesk's Crypto People of the Year.
This is James Seyffert, also
James
a member of the
Seyffert
team.
from Bloomberg Intelligence. And it's just,
Did that go
a
to
moment.
his head?
I think so, yeah.
They made those penguin NFTs? They made a penguin NFT of my face. That was kind of cool. But
did you buy it?
I mean, they called us the ETF bros, and I like that. I've enjoyed my time there. It's an interesting crowd. Like I said, I'm a true boglehead, so I can't go fully into it. But it's a little, it's a controversial area still. It's not something that's fully accepted everywhere. But for the most part, I think what was interesting about this year, I was going to bring up Bitcoin, but is just the Larry Fink, Fidelity. These are people who have a lot of trust and credibility. And for them to get behind this with products on their name it definitely has brought it more mainstream and made it more acceptable and exciting for me and James to be part of that. But I'd say a year ago, it was still kind of getting rid of that SBF stench.
I mentioned it because the Bitcoin ETFs were huge, like really so huge. IBIT, the iShares one, it got over 50 billion, right?
Yeah, that's absurd.
It's a crazy
in less
number.
than a year, actually.
Yeah. Let me drop a number on this. I'm going to blow your mind. $50 billion in 221 days on the market. The next fastest ETF to $50 billion was 1,329 days. So 1 year versus 4 years. And that was IEMG. The other thing that's interesting is if you have any given year of ETFs, if your ETF gets 1% of what IBIT got, which is 500 million, you would probably be in the top 20 most successful launches of the year, right?
Yeah, I mean, let's just look at, I'm assuming, first of all, this was your second story?
No, I still have a really good one coming up.
This one?
Yeah, this was all part of
We'll call this the interlude.
Yeah.
Okay. We'll call this Stealing Thunder.
Yeah, interlude.
But the seventh largest Bitcoin ETF, which is CoinShares, pulled in, has $930 million. The eighth largest one from Invesco, BTCO, has $900 million. The ninth largest, Franklin, $800 million. Everybody had success. This was, when you guys talked about it being a race, it has been a race, but coming in ninth place has still been a success for the firm.
Yeah, that was something some people, there was the haters that were like, it never get approved. Then they were like, well, but there'll be no demand. Then they're like, well, but some of these are going to liquidate. There's not enough demand. Now they moved on to all kinds of other stuff, but now it's not the right people. They just keep moving the goalpost. If you hate this area, you're just going to find ways to hate. That's fine. I think the numbers speak for themselves. You can see them getting quieter and quieter. I don't know where all this goes, Joel, but we do think that the Bitcoin ETFs are probably going to pass gold ETFs and assets because they do act as a store of value, yet they also have that hot sauce quality that gold doesn't.
When does that happen?
So right now, in the U.S., those ETFs have $110 billion, and gold ETFs have $128. So they're only $18 billion back. I thought it would take 3 or 4 years for them to. It's
like a next year.
It is. It might be. I mean, at this rate, every day it's like something new happens. That's good news. Look, who knows? This is very volatile, unknown stuff. But I do think that the ETFs brought low cost, liquidity, no friction, and again, they brought air cover for the advisors out there who are like, well, Larry thinks this is okay. It's okay.
All right, Vildana, what's your official number 2?
Okay, my official number 2. Well, I was going to say, and we forgot to mention, we keep forgetting.
Oh,
because
is this
your number 2?
No, there's just, no. My number 2 is coming up, but we didn't even say Bitcoin crossed over 100,000, which is what's helped these ETFs.
Well, but Trump too. Right?
Yes, but
Trump helped it get to 100.
Yeah, of course, but
it wouldn't. I don't think any of that would have happened had the ETFs not happened earlier in the year. It, like, laid this foundation for permission, basically.
It's just a string of really astonishing numbers and records. And anyway, my number 2.
Yeah, for real.
I was trying to come up with a topic that I was hoping none of you would come up with.
Oh, this is going to be good.
Yeah. We had so many executive changes at issuers this year. We had Vanguard has a new CEO. State Street has Anna Paglia. She's their executive business officer, I think, chief business officer. Brian Lake moved to Goldman from JP Morgan. We had huge turnovers at GlobalX. The list goes on. It's just lots of changes happening, some because some of these companies are trying to be even more innovative, even more involved, put out even more ETFs and new products. So just trying to change our perspective a little bit from just the record numbers.
I like the attempt.
Well, I think it's great because, first of all, those are all proven people that have taken their talents and gone someplace else and likely can see the success. But then people are getting moved up within those respective firms. So Invesco has Brian Hartigan that's taking on an additional role. I couldn't name each person, but we've seen Travis Spence at JP Morgan, again, fresh perspectives.
All right, Vildana, that was a good one. A little slightly different note than usual, and I appreciate that. We'll distinguish it from, Athanasios. He only talks about inflows all the time. Todd, what's your number 2?
Yeah, he where's the originality in that?
Boy, you set me up so now I can't talk about inflows, but yet I still will.
Okay.
So
all right, take a little heat off of Ethan there.
Vildana's interlude number 1 was about active launches. I'm going to just talk about active fixed income flows because obviously we've had success. And Eric can fall asleep, but $100 billion. $100 billion went into active fixed income ETFs. JAAA, which is a CLO ETF from Janus Henderson, which was a relatively late entrant into the ETF marketplace. We had Fidelity with FBND with over $10 billion. We saw Capital Group.
What's it all about? Why?
So we've seen investors long embrace active management within fixed income. We have the Fed that finally started cutting rates and then now perhaps might be on pause by the time people hear this, because we're recording this before the Fed does its meeting. And they've been embracing ETFs, and that's just the marriage of those two things, plus such proven asset managers that are now in this space. So advisors are turning to active fixed income ETFs. I think that's just a great opportunity for the experts to help the investors and the advisors.
Yeah, it's not necessarily new, but sure. I mean, bond ETFs, I think, took about 20% more. They had a record, too. And bonds haven't done that well this year. They were kind of meh, compared to stocks. So for them to have a record that's 20% above the old record is pretty good sign when you're not crushing it. JAAA that really did have a good year. But like Ag and BND, what are they up 3% this year or something? But they took in 13% of all the flows. People love that Ag core,
But people also love trying to beat the ag. So $100 billion for active fixed income ETFs is a great milestone, is a sign that we're going to see even more success.
Absolutely. And I think you'll see more managers come in as well. They seems to be a slight – bond managers get a little more love than stock pickers pound for pound, I feel like.
All right, Ethan, bring us home. What's your last theme of the year?
Let's talk about flows again. Okay, I don't have an actual stat, but we've been covering this a while, and what I thought was really interesting about this year, whether or not they launched this year, it's not really the point. It's that there was a lot of categories that came into the spotlight this year. So, like for example, obviously Bitcoin, that was one. Buffer ETFs, yield max ETFs, single stock ETFs. So I can't remember one
private credit.
Private credit, another one that was like talked about a lot. I can't remember normally this would happen like once a year, like something like that. But to have all these simultaneously come up in the same year, I thought was really interesting. So it's definitely been really exciting to cover because you have all these categories that were born this year. Buffers too, another one, like they've been around for a while, but they really have been surging in inflow. So
that's a really astute observation. Like I think we talk about all of those things sort of in isolation. When we step back and have a year in review episode, it's a good moment to be like, wow, look at all of those things in tandem.
So yours truly tried to thread all that together, and here's what I came up with. The ETF industry has gone from providing beta into solving problems, and even further, changing your mood. So I almost equate a little pharma action here, because whether you're a worried boomer, buffers, or a bored millennial Gen Zer, single stock leveraged, they're providing things that are going to change your feelings. So we think that, the new white space is your mind.
Wow, that's deep.
Yeah.
You like that?
Yeah.
It's a work in progress. I got to fine tune it a little bit.
There's a psychedelics ETF that was out there. That's in Canada, right?
No, there's still one here. But the point being is, the reason what Ethan just said is interesting too. Besides Bitcoin, they're pretty cheap. I'm going to move those aside. That's like a whole new asset class. But the buffers and the single stocks in particular, they all charge 90 to 100 basis points. So for people to come in and out of nowhere create a category in the Vanguardian era that can charge that much, you got to study that, because we write to our clients a lot who are in this industry like, hey, this is what worked and why. And that's why we're like, you maybe don't think about what asset class you can cover, but maybe think about what problem you can solve or what mood you can change.
2025, we'll be talking about mood some more. What do you think?
Yeah. Okay, can I give my last one? You guys hit on it a little bit.
The final interlude, final countdown?
Yeah, mine flicks forward too. Well,
Okay.
I'll do a quick twofer because I want to hear all your comments on this. First is what he said, private credit, a filing. Every year there is one filing or two filings that are earthquake level, and this year it was the Spider Apollo private credit filing. There was a couple other CLO private credits, but those are just investing in CLOs that happen to have private credit in it. The Apollo one is interesting because it's direct private credit and Apollo is part of it. They're massive. The bridging of the gap between that world and the public is major. The CEO of Apollo really wants to do this. It's going to be a baby step, but if they can pull this off and figure out how to make something illiquid liquid with Apollo's help, man, this is a big deal.
Yeah.
This could really disrupt a lot. The private funds market is like $14 trillion. It's bigger than ETFs.
Mm-hmm.
That is going to get interesting.
Well, I think it also did spur. So the products that we now have in the marketplace, Bond Blocks having one of them, I think there was a race to get that to the market ahead of the State Street Apollo to ride that tailwind that the market isn't, the ETF industry and the market is now focused on getting private credit within the ETF space.
I don't blame them. They did the right thing. They moved it out. It's just not quite the same. It reminds me of the Bitcoin futures ETFs versus Bitcoin spot. To have CLO private credit, I don't know. You know how ETF investors, they want the real deal. They want the stuff that they want the real party behind the party.
Well, let's see if the real party actually happens. Let's see if we can get.
What do you think?
Well,
what do you think the odds are?
Oh, I think it'll come to market. I think State Street and Apollo want to have it come to market. I think it's a focus for them. Will it be as liquid as we hope it will be? Taking an illiquid asset and making it liquid. I'm hopeful that that's the case, but
One
we'll
thing
see.
on this. Let's say the private equity or the private credit part isn't that liquid and the fund overall is semi-liquid. We've seen cases of ETF, like the Japan ETF is illiquid every day because the stocks don't trade. In COVID, the high yield muni ETF, HYD, traded at a 29% discount. Since then, it's taken in money and has had plenty of volume. Like nobody cares. I think people trust the ETF price and the industry. And so I think even if there is like a gap between the supposed NAV and the price, I think ETF investors would rather have that discounted, perceived discount than go into like an interval fund or some other form that's not quite as familiar and comfortable to them as the ETF.
I think so too. I just think it's going to require education, and we might see a delay in the
Job security for us, man.
Yes, listen, we're approaching 4,000 children we have to take care of in this industry. That's wonderful.
Well, we'll be watching the new SEC chair and the SEC conversations next year to see how this private credit one
That
goes,
should have
right?
been my last topic.
Yeah?
Now that I'm thinking of it, because there are three little sub things. That new SEC chair, you're probably going to see private credit, no problem, because they're going to be more libertarian. And like Gensler was pretty tight. I think it's going to be looser. The other thing is the ETF share classes, where you can just like bolt on an ETF share class to a mutual fund.
Mm-hmm.
I think that's going to be like it's going to drain money into the ETF. A lot of people will switch over. It'll make switching easy. Do you think, is there any other take on that?
No, I just don't know that the SEC is ready to move forward on it, but we'll see with a new chair and new leadership. They seem to be, well, I would have thought by now we would have seen approval if we had this conversation a year ago, and we haven't. So until we see I think what they'll probably do is approve a couple of them and see how they work before opening up the door for everybody.
Here's what this whole thing has going for it. It's got these gigantic issuers. I think there's 35, 36 that collectively manage like $7 trillion. These are big, no-nonsense
It's the
companies.
industry.
It's the industry. And they are close with the ICI, who's close with Washington. They're going to get this done. There's too much power behind it.
There's just one name. It's BlackRock. There's like, once they show up, it's just like, all right, yeah, it's happening. Like, is there anything more than that we need to know?
Well, but the good thing is that it's not just them. It's some of the large mutual fund companies that don't have much of an ETF presence.
No, but he's saying that like BlackRock filing for it helps everybody because they got so much muscle.
No, I agree. But if the SEC is worried about mutual funds versus ETFs and the firms that are disproportionately tilted towards mutual funds are comfortable with offering ETFs, I think that should make it more palatable than the largest ETF provider saying, let me offer ETF share classes to my existing mutual funds.
Yeah. Well, Vanguard did it. They were a mutual fund company, and they did it successfully. So I think there's a precedent. The final thing from the new SEC chair is just when I think I'm out, Joel, they pull me back in. We're going to see a ton of altcoin ETFs, XRP, Solana, HBAR, which I had to look up. I was like,
Gelt.
what even is that?
You're going to have a Gelt ETF?
Yeah. They're
Well,
going to listen.
There's some, ones that we shouldn't even name.
Fartcoin.
I wasn't
Oh my
going to say it. It says
Listen,
$700 million
Ethan is
coin.
going to lose his mind, and so am I.
I thought it was done.
I know.
I'm like, you guys have no idea. I have to live in this chat with Eric and James every day. But to that, if I could just add about the private equity thing and these now altcoins, and that's what you got to really admire about the industry. Like, we're just coming off of this fantastic year, and the industry's not saying, let's just take a break. Like, they're just like, let's push the next frontier, which is private assets, whatever. And that's what you got to love about it. And I think with the new administration, I wouldn't be surprised to see ETFs that are like completely tied to that, like tariff ETF. So they're very opportunistic. I think there could be we could maybe have another crazy year of filings and launches. So, but that's what you got to love about the industry. They just keep pushing the envelope.
There's a moment where it goes too far.
Well, what would stop all of this, and especially the new product, is just a really vicious bear market. That will cool everything down. But until that happens, I just think that the spirit of this year is going to just bleed into next year.
It would stop the product innovation perhaps, but it's not going to stop the flows. We
No.
actually see money go into
Although I don't
ETFs.
think you go to $1 trillion. In 2022, the market was down 18%, and they took in $600 billion. So I think I think the market helps everybody just want to put money into it. But I agree with you. ETFs will take in money, rain or shine.
Ethan, Vildana, Todd, thanks so much for joining us in Trillions.
That was great.
Thanks for having us.
Thanks. This was fun.
Thanks for listening to Trillions. Until next time, you can find us on the Bloomberg Terminal, Bloomberg.com, Apple Podcasts, Spotify, or wherever else you like to listen. We'd love to hear from you. We're on Twitter. I'm at Joel Weber Show. He's at Eric Balchunas. This episode of Trillions was produced by Magnus Hendrickson. Bye.